Robert.
Thanks, Robert.
So Washington Mutual, also known as WAMU, cutting dividends, slashing 3,000 jobs, closing 186 home loan centers.
Should the rest of the banking industry be worried by Washington Mutual's gloomy outlook? Our Fox panel is here with some answers. Peter Schiff, author of the book Crash Proof, Euron Brook of the Ayn Rand Institute, Victoria Barrett from Forbes, and Gary Kaltbaum from GaryK.com. Victoria, let's go to you first. Of course, we got to put WAMU in context of what happened yesterday, right?
Yes, I think what's interesting about WAMU is this is a company that went very aggressively after the mortgage market. So it's not so surprising that they had heavy losses and needed a bailout of sorts. But I think the good news here is that taxpayers didn't have to foot the bill. The market had a solution to the problem. Look, if you're a shareholder, you might not be thrilled, but your alternative might have been pretty ugly, too.
Peter Schiff, Washington Mutual. Do we have another one out there lurking? Well, 2, 3, 4?
How often do you see one cockroach? You know, there's going to be many Washington Mutuals out there. The problem is, you know, Americans are broke. They can't repay their loans. So anybody that lent money to Americans, whether it's to buy houses, which they overpaid for, to buy things on credit cards they couldn't afford, to buy automobiles they couldn't afford, the whole thing is imploding. And unfortunately, you know, it's not the taxpayers. Look at how much of this mortgage paper the Fed has been buying up. If it wasn't for the Fed, Washington Mutual might have gone under. I mean, they've basically been backstopping this by buying all this paper behind the scenes, and it's not the taxpayers, it's every American citizen who's going to suffer because the dollar is going down the drain.
But Gary Kaltbaum, to make the analogy that financials are like a nest of cockroaches and that our country is nothing more than a garbage dump, it's a little bit of an overstatement, don't you think?
Well, look, the things a lot of these financials companies did and got into over the last couple years, I mean, it's now evident how bad things are. Look, I think Countrywide was going to go out of business before they got bought out. I think Washington Mutual also. I think if you look at a national city, the way that stock is acting, that may be next. So there may be others, but I don't think there's going to be a monstrous drop-off here of all these banks. I think, look, I don't like what the Fed's doing, but I think they're doing what they have to do, and I'm hopeful that it's enough to stem the tide here, and enough's enough and we don't see more of this, but it's very tough, and if the economy falls off a cliff, anything can happen.
Euron, here's something that's tough. Avoiding getting caught up in the herd mentality. A lot of these banks kept hearing, well, the guys next to you are doing this, and you should do it too if you want to make the kind of returns that they did. So it would stand to reason that there are, as Peter says, a few more cockroaches out there. It's just a question of how bad will the situation be.
I mean, first let's remember that the herd mentality was fueled by the Fed encouraging everybody to lend money by keeping interest rates at negative rates for all that period. But yeah, there are going to be others. I think we've got the three big ones. We've got Countrywide, Washington Mutual, and we've got National City, which is going to be next. And it's not true that shareholders haven't bailed these banks out. They have. They're doing it all the time. Federal Home Loan Bank is lending these banks tens of billions of dollars. Deposit insurance is a form of subsidy, which we're subsidizing these banks. And the Fed is in the background trying to arrange these private mergers. But we, the taxpayers, are the ultimate guarantors of the entire financial system. This is going to cost the U.S. economy huge bucks. And Peter's right. As long as the dollar is in decline, we're in economic problems.
Although, Victoria, just to put Washington Mutual in context, Washington Mutual didn't get into subprimes until very late. That is, the time when people were making a lot of cash on subprime mortgage bets. They weren't in it. They got into it very late in the game. So what they did is essentially reap all the losses from it. So they were particularly hard hit.
Particularly hard hit. They went very aggressively after first-time home buyers. They expanded very aggressively, especially in California, opening up branches. Now we're seeing the reverse of that. But, yes, the taxpayers are going to foot a huge bill for this housing crisis, and that's a darn shame. But what's so interesting about Washington Mutual is that, hey, it was a let's make a deal moment. The TPG came in and said, we see value in what you guys have at a certain price. And to me, that's promising, because that's a sign that the market might have the ability to clean up some of this mess. Not all of it, but some of it.
Peter?
Well, Euron is making the point that the Fed is doing what they have to do. Why do they have to do it? I mean, sure, we're going to have a severe recession. It's going to be ugly.
I doubt Euron is saying.
But
I did not say that.
I know him.
But they don't have to do it. We can go through this recession. It's going to be painful, but unfortunately, by trying to delay the pain and pretend that Main Street isn't going to suffer when they're going to suffer, we're making it worse, and we could destroy our economy.
I understand that, but Gary, my point is, and I agree with a lot of what you say about the Fed and so forth. However, the point is, if somebody finds value in Washington Mutual, despite all of the problems, they got into the subprime mess too late, got more losses than most people. So if there's value in Washington Mutual, perhaps things aren't so terribly dire.
Well, first off, this Texas Pacific group that came in, they're getting it for $8 a share on the convert, so they're underneath the market. So they already have a nice little cushion in there. Look, the big thing here is I'm happy to see something like this. I'm hoping we end up with something like we had back with the S&Ls, where more people come in, find value somewhere. But once again, I get back to the point, if the economy worsens from here, I think it only gets worse, and it only feeds on itself because credit, it continues to dry up. All my research and all my talking to banks, it's just a very tough environment here. And, you get into this vicious cycle, and then you get into this uh-oh type of environment. Gary, we'll see how it plays out.
And Gary, when you hear in the Wall Street Journal today that Alan Greenspan's really offended and hurt that people are blaming him, your first thought is?
Look, listen, this couldn't have happened without the lenders, without the borrowers, without the hedge funds, but Alan Greenspan set the conditions for all this to happen.
And Ben Bernanke sat right next to him the whole time.
And most importantly, he even said it. He saw subprime becoming a problem, but he didn't know how to go about it and fix it. He let things be, and then we end up with what we're ending up with.
Plus, one more important thing, the whole time where consumers were extracting equity, Greenspan was applauding this as a source of economic growth, saying what a wonderful thing this was, that people can monetize the value of their homes and spend it. And again, one of the reasons the problem is so bad, one of the reasons that people have so little equity left in their homes is because they extracted it out and spent it. Exactly what Greenspan was
Of course, hold on a second, Victoria. You are in Silicon Valley. You were there for the dot-com bust. You understand what Greenspan was dealing with. Right after the dot-com bust, you had 9/11. I mean, there were some pretty heavy things weighing on this economy.
That's what we have to remember. Look, I'm not defending Greenspan's actions. We had low interest rates for a long time, but he was also trying to get us out of another problem, and we had growth for several quarters that we probably wouldn't have had without low interest rates.
Sure.
Are we paying the price now? Sure. But is that really the Fed's fault that lenders got crazy?
Yes, it is their fault. We should have experienced a much deeper recession. George Bush ran for re-election because the recession was so shallow. It shouldn't have been shallow. It should have been pretty severe.
Well, let me just ask Euron, should we then extract from the Federal Reserve Board its responsibility about growth and just concentrate it solely on the value of the dollar?
Well, if we're going to have a Federal Reserve, then yes. I think ideally we wouldn't even have a Federal Reserve and let the markets deal with interest rates and money and so on. But yeah, the Federal Reserve should not be in the business of bailing out banks, of dealing with growth, of dealing with employment. They can do a good job at dealing with one variable. Now they're dealing with 20, 30, a billion variables. And let's remember, they're the ones who created the internet bubble. I'm not going to let Greenspan off the hook here. He's a serial bubble creator, not just one bubble. Not just one bubble under
Just a bubble.
Oh, so much for that. All right. Sorry, Alan. We tried. Listen, it's better to be like Paul Volcker, who was despised in the beginning for what he had to do, and now everybody talks about it.
We want to find something for the guy. All right, Gary. Well, let's take it to our Fox panel and go to Peter Schiff first. Peter, is there anything, this is a sort of a perennial question for you, but I know that you're not buying anything that's denominated in dollars yet, but what would you look to as one of the beaten down stock sectors that you would eventually get into? In
the U.S.?
Yeah.
Now, the ones that I think are beaten down aren't beaten down enough yet. I mean, the problems are going to get a lot worse, and I think the dollar is going to get a lot cheaper. So, before
wait a minute. They're calling you now.
Busted. Let me go to Nicole Petalides while Peter deals with his Australian traders in Zimbabwe. Nicole Petalides, the big feeling on the floor, did the Fed minutes have anything to do with the sort of direction of the markets?
I don't really think so. I think that everybody heard a lot of what they expected to hear. Some of the words that were surprising, words like severe economic down slump being a concern, also inflation, but they weren't enough to really really moved this market. I think a lot of the traders are happy that we crossed at least 1 billion shares changing hands here. Some of the movers, the coal stocks, Arch Coal was a big mover. Of course, we had Washington Mutual, Alcoa, AMD. Those were some of the big names to watch today. BHP Billiton, as we hear China may be taking a stake there. Those were some of the names that we're watching, and the airlines as well. But really, I think the traders here are just waiting for some action. And really, you mentioned Citigroup as being one of the big laggards on the Dow Jones Industrial Average, and the banks will be reporting next week, and that will be key. But really a mixed market, and as I just looked at the Dow Jones Industrial Average, we have 15 to the upside and 15 to the downside. So really split right down the middle on the Dow 30.
All right. Well, let me go to Victoria if I can. Victoria, part of the good news here is that we see the market is still above that 12,500 level. Does that indicate that they've digested the news of WAMU, they've digested the news of the Fed, and they still think there is upside potential here?
Well, again, I mean, we're seeing this a lot in these months where, like, the fact that there isn't worse news is a good thing. I mean, yes, that's positive. The market doesn't seem to want to go down. There seems to be some positive momentum among investors. They want to get back into the market. But you know what? I think I hate to side with Peter because he always thinks the sky is falling.
Don't hate that. That's all right.
But I think we're still going to see a lot of consumer weakness, and that hits everyone, including tech. That's why we're seeing Apple take a hit today.
Yeah, well, Apple
they
did
are
get
a consumer exposure.
Did get downgraded. Worries about the consumer spending, Gary Kalpon. But putting all of that aside, for the people watching who are still putting money in their 401ks and still having somewhat of a longer-term outlook, what should people be doing?
Look, longer term, I don't know what I'm eating for dinner tonight. Look, longer term, the S&P is where it was in 1998. For me, though, the market is acting better here, and I know Peter hates it and thinks the world is ending, but as long as we have days where the market is up on big volume, down on lighter volume, if I continue to see leadership show up, the new high list expand, I'm playing. I was out the whole bear market 2 weeks ago. I started tiptoeing in, and as long as the market continues to prove itself on a daily basis, I'm good with it. I am scared because of the news. I'm worried about financials, but the market is the market. It's its own little mechanism, and as long as I see accumulation, I go along with it. I have no clue where things end at the end of the year.
By the way, before Peter goes in, what did you tiptoe into, Gary? Be specific. What sector or stocks?
Well, believe it or not, I bought into housing stocks. They've been acting very well in the face of all kinds of bad news, and just a broad area. Now I'm looking at some leadership. I'm seeing leadership in names like MasterCard. Visa looks like it's going to start moving off its IPO. Research in Motion looks to be strong, and these are all companies with great earnings and revenue growth.
Well, look, I think you're premature here. I'm not thinking the whole world's going to come to an end. Just our phony economy. So I'm very bullish on other parts of the world. Yeah, but there's nothing magical about 12,500. I think there's a lot of resistance around 12,700 to 12,800. We've been here many times before. I think we're still in the trading range, but I think the next leg is down. I wouldn't be surprised if we popped above the highs just to stop some people out. But I think this is a continuation pattern. The market's going lower. You're in too early.
And when you hear that Gary Kalpon puts it into perspective by saying the S&P is right back where it was in 1998, hey, 10 years later, it's a tough nut to crack if you're investing, but you take the risk, and over time, supposedly, the stock market, on average, does go up.
That's right, and those folks clap and know that as the trading day comes to a close. Here, the business day continues, and here's some financial news.